Let's bring on what Kunal then and talk about what he's making of the market setup right now. Kunal, little choppy in the second half yesterday. What do we have in store today?
Yeah, it should be positive for the markets. Even though I think the Asian markets are showing flattish, but my bias is that with the recovery in S&P 500, using Nasdaq at all-time high levels, it's a phenomenal recovery because both these indices, they had fallen by a magnitude of more than 10% for themselves. When the entire geopolitical situation started off, and then for them to recover into a V-shaped manner, I think is just spectacular. You look at Dow Jones also, I think it fell from 50,500 to 45,000 approximately. So like a 10% correction, and it's recuperated half of those losses. So that tells you that we are also trying to mirror what's happening across the globe. We fell 4,000 points on the Nifty. We've recovered 2,000 points so far. So now I think we would probably try and mirror what happens across the globe. But if S&P 500 and Nasdaq are making new highs, there is going to be a lot more push which could come back into emerging equities as well as India. So I believe now from here on, we would not just try and mirror the path across the globe, but there is a very strong possibility that we come into that zone of outperformance because there could be a huge lag which our markets faced in 2025 and 24. So that underperformance will get caught up into.
And interestingly, FIIs were buyers yesterday and DIIs sold. That was quite something.
But you look at from a long-term perspective, DIIs have been buying for such a long time, right? Yeah. They just sold 3,400 crores. Some profit booking they have done in that, but it doesn't mean that FIIs are back with just a few hundred crores, which is there. But Kunal, yesterday interesting stuff. Premium Nifty futures ending at a discount. Then you have unwinds which are coming in for Nifty futures, Nifty Bank, HDFC Bank saw roughly around 1,400 crores of unwind which happened there. There is a lot of pressure which is now building up on the index. It seems that the rally is now there's a fatigue which is setting in for the rally.
Yeah, that's a better word to use because the list of large cap names is getting a little bit more lesser. Because L&T has already moved up by more than 15% from its lows. Reliance is not doing anything. HDFC Bank, I think, tried to show signs of that 5%, 7% outperformance or maybe a rally, but then that stock is getting sold into, or at least you look at a new normal for HDFC Bank, which is not at 750 and which is not either at 850 levels, but maybe closer to 800 as a pivot. So I think many of these large cap stocks are maybe sort of done with the first phase of the rally, and you would now expect that many of the other mid caps and small caps would try to outperform. The best part in the last 7-8 days, Sadit, has been the market breadth. Because without any doubt, the market breadth has been spectacular. Look at the volumes being chased by many of the stocks. You don't look at an average volume of 5x and 10x on stocks, and those 10x multiples in terms of volumes are spread over the last 3 months to 7 months for many names. That kind of volume chase is very rare when there is, when there is such kind of a geopolitical news flow which is acting as an overhang. That generally happens when the risk-on appetite comes back again from the market perspective. So we are looking at a phase where possibly for the next maybe few days or a couple of weeks, the index could remain sideways. We would try and mirror what happens across the globe, especially the US markets. But our market breadth would keep on getting stronger and stronger.
And do you see the correlation to be much more closer to Asian markets as compared to the US markets, given the fact we are in the same basket as from a geopolitical point of view?
So I think I would probably look at this as a correlation with respect to the US markets more, not with respect to the Asian markets. Because if you look at the last 3-4 days, there were days we were discussing that, the Asian markets sold off from the highs, but our markets still managed to close at much beyond the opening highs for themselves. Even today, for example, when you're seeing Hang Seng, etc., down 0.5% to 1%, our markets, at least the GIFT Nifty, is showing a very, very flattish or a muted opening. So that tells you that our markets are slightly more resilient with respect to Asian markets, and we would try to mirror what happens across the globe, especially the US markets.
And therefore, stock buyers, Kunal?
So more mid-cap oriented names and more high beta stocks over here. The first one is about IEX. Now, after quite some time, the stock comes back into a radar in terms of a potential breakout. The stock inching towards 133-34 levels as a breakout point yesterday. Indicators very strong for the stock on the short-term chart. So expecting or taking a high-risk bet over here. Would look out for 142 as an immediate target for IEX, stop loss at 130. And the second would be a buy on Container Corporation. This could be also another interesting stock. The stock heading towards a breakout of the 500 mark. It's trading sub the 200 moving average for itself, but I think Concor is something which continues to look very attractive at the current juncture. Would suggest a buy with a target of 525. Stop loss could be kept at 485.
Okay, let's quickly switch